So hello guys, this is a new video. This is a new trade breakdown of a trade that I could cut, like I could have made money on, but due to me being in school and me not being actively on the chart, I ended up missing the trade, and the trade is actually running in profit now. I can show you. This is just a first scan video. I want to do a first scan video and break down this trade for you guys. So let's get right into the analysis. It's not a long video, it's a short video, and I didn't take the trade. I'm repeating, I didn't take the trade, but I just did the analysis. I did everything, and the trades actually played out, but I didn't take it due to me being in school, and the trade could actually make a lot of money because it can make like 10-20 hours. So let's get right into the chart and show you what was my thought process, everything. So let me go to the daily time frame first, the 24 hours. Let me go to the daily time frame. So as you can see from the daily time frame, this pair has been bullish, making highs, lows, highs. So let's continue. Lows, broken highs, broken lows, breaking highs, lows, high, lows. And as you can see, when it make this high and come and break this low, it give a change of character. I can still make a shot on this trade. I don't know if it's possible because the structure has actually changed from being bullish to anticipating it is going to be bearish from now. Thus I can still take a trade. But I don't know if it's all this area is gonna end up like being a trend line liquidity. As you can see, this is the overall structure. It's been bullish for a while. It's been bullish, as you can see on my screen. The trade has been bullish. Where is my mouth? This is my mouth. The trade has been bullish, so I'm thinking about going short, anticipating it to keep on selling. You feel me? So let me delete this long. So let me delete also this. So when the market broke this structure, let me confirm it. When the market broke this structure, as you can see, when it broke this structure, the structural level, it left an area of demand. So as you can see, this is the area of demand. So this small one that you see down here, this small one is a refined area of demand. It's a refined area of demand on the lower time frame, but this is the actual 1 hour level of demand. So when the market reached that area, I went to the 4 hours to refine my daily level of demand. When I went to the 1 hour, so yeah, as you can see, this is the level of demand on the daily. We have two level of demands. We have this right here, which also correlates with the higher time frame, and we also have this red candle right here, this doji candle right here. We have it also right here. So let me go to the 1 hour for you to see. When I went to the 1 hour, load right now, load. When I went to the 1 hour, as you can see, when I went to the 1 hour, I refined this level of area. You can see this is the area of order flow when you go to the 1 hour, but this is the refined area of the level of demand, as you can see. And we have an inducement level right here. As you can see, I've marked it before. The market didn't retrace to this order block, didn't retrace to this level of demand, but I marked it, I left it, because when we have unmitigated level of demand and unmitigated levels of inefficiency in price action, price must come and rebalance its price. So we have a swing low right here, which is a trap for smart money traders, because which I also ended up being a trap right here. But as you can see, we have this level of demand that broke structure. So any smart money trader will put his entry right here after I saw it broke a structure and put his stop loss below the swing low, anticipating to go up. And we extend this to the left, to the right. As you can see, that smart money trader got killed at that area. So we have a level of inducement. We have a level of inducement, a smart money trap, as you can see it right here, a smart money trap. We have a smart money trap right here, SMT, smart money trap. So after the smart money trap, I knew that I have a refined level of demand from the daily time frame, which is right here, as you can see it right here, level of demand on order block. So when the market came, so sorry for the interruption. So where was I? The video just got stopped out. I'm just making another one right now. So when the market reached this level of demand, what I did is that I went to the lower time frame, which is the 5 minutes, so that I can find my confirmation entry. And you know, always a disciplined trader is a profitable trader, as someone who I look up to, which is a very successful trader in this field. So when I got the mitigation in the 5 minutes from this candle right here, as you can see it from this candle right here, I started looking at the structure. Always pay close attention to the structure. So this is a high, this is a low. The market come and grab liquidity to the low. Again, didn't come and grab this liquidity the way I wanted it, making this low an equal low. And you can see right here, we got a shifting structure right here, which is also when a market come give you like this kind of shifting structure, this kind of one, which it doesn't give any displacement without even leaving any displacement or even a fair value gap, don't consider that area. Just look for another shifting structure. So when the market came and make this high, as you can see, market came high, low, couldn't break this low or even break it with some little, grab the liquidity a little, not so much, then it displaced to the upside, giving us a proper shifting structure. So when it gave this proper shifting structure and this minor, this very small liquidity gap, this very small liquidity gap, as you can see, very small, which is even someone will take it as a equal loss because it didn't close below it, but it grabbed it a small. As you can see, if I zoom in, you can see that it grabbed the liquidity a little grab of liquidity. If you have stop losses right here, it come and grab it, then what? It shifted the structure. Now we are on a bullish market structure. So we are looking for an areas of demand, and when we look for areas where to enter from, we cannot just pick a random area like this level of demand. As you can see, we have this level of demand, and we have also this level of demand. We have two levels of demand, but which one are we going to take? When the market comes to this, which type of structure are we going to take? Then we're going to take our Fibonacci level from the low of the movement to the high where we got our retracement, like this. So where's our level of interest? We have a 71.6 level and we have a 61.8 level. This is the 71.6 level and this is the 61.8 level. So one of these is our entry. So one which give us the most correlated, which give us the most order block that we think is possible for the market to react from, that has a displacement, that has a fair value gap, that has every confirmation entry on it. This is the area that we are going to take. So as you can see, the market came, let me see, the market came to this level of demand, which aligned with the 61.8 level, as you can see, which aligned to the 61.8 level, as you can see. This is 61.8 level that aligned with the 50% of this area of demand. So of me to avoid missing entry, I took the whole area of demand. With my entry on it. Stop loss at the swing low, targeting higher time frame level of liquidities. Where is liquidity? Liquidity is always on swing highs, swing lows, equal highs, equal lows. So load. So as you can see, where is our swing high? Where is our draw liquidity? We have one right here, and we have the overall one right here. We have two levels of draws of liquidity. I know, and the rule of let me close this one. Rally base rally. So this our we have two levels where we can take liquidity from. We have this level and we have this level. So as you can see, when I go to the 5 minute again, we can have a second entry on this trade, which I could have caught, but due me to being in school, so as you can see on the lower time frame, let's clear this. This is our first entry, which is right there, is 11 hour. And when I see we have a high right here, as you can see, we have a high, we have a low that we got mitigated from, and we got another high, as you can see. But this is another low. We should consider this low also. So we have high, low, high, low. Let me refine it better. This is our first entry. Don't forget about it. This 11 hour entry. High, low, high, high, low, then our high. So what are we going to do? We see the market broke another structure to the upside. Let me clear all this and show you the break of structure. This all, I don't think if I'm gonna put this video on YouTube because it has too much sauce on it, but I don't know. I may keep it for the course. I may keep it for my private course. So the market come and broke this structure again. When it broke this structure, we are looking for another entry. So I'm going to take our Fibonacci level from this high to this low, from this low to this high, I mean. So we are going to look for a 61 and 71.6 levels for this entry. Let's take the 71.6 level as our entry, covering this whole area of order flow. The market come and mitigated it, giving us our second entry, with our stop loss being at the low, right here, targeting the draw liquidity. Where is the draw liquidity? This is the draw liquidity, and this is the extreme high. So 1 to 11 and 1 to 19, giving us a 1 to how much? And the still is still running. As I said, I could have taken it earlier, but I was in school. As you can see, the first cam just went off, so I'm gonna continue with the explanation without the first cam. So 1 to 11.4 and 1 to 19.6 is going to give us around a 1 to 30 risk to reward. So I miss a 1 to 30 risk to reward. This is very absurd. If I target the draw liquidity right here, this is a 1 to 8, and this is a 1 to 14. 8 plus 14 is almost 20. Let me see, 8 plus 14 is almost 22 or 23. I don't know, I'm bad at math, but this is a lot of money. That I could have caught. Just that's why I tell you, school is a total scam. I'm doing it just for the sake of certificate and all that, but this is the real source. This is the real knowledge. This is everything that you need to be making a lot of money. And this trade could have actually made me, with these 2 entries, I could have made a 30R if this thing hit TP, which is actually going in my favor right now. I could have another entry if I took this back. As you can see, I can have another entry because the market structure has already changed. We are bullish. We are bullish after the mitigation, the higher time frame. I can do like this. This is another break of structure. So we're gonna wait for where we get our retracement, maybe right here or maybe right here, I don't know. But this is the first retracement that they have that didn't come to the premium level of Fibonacci. As you can see, this is the area of, this is the low, this is the high, and we have another high up here which didn't come to the discounted level. So I don't know which one I should take, but when the time is right, and I will definitely know which one I should take and take my trade from. Maybe this 6 to 1.8, maybe 7 to 1.6, which is this demand right here, targeting another high, with my stop loss being at the low, targeting the draw liquidity again for a 1 to 10, risk reward. So this is all for the video. Please guys, like, subscribe, share. If I post it on YouTube, like, subscribe, share, and share the people with who are trading, so this will give them a lot of knowledge about how I trade, how I do my things. And if you're interested in my mentorship, I'm gonna launch a new course which includes psychology. I'm gonna be emphasizing more on psychology than technical analysis, because psychology is what is gonna determine you as a trader. Is what is gonna make you a great and profitable trader, not the analysis. Technical analysis is bullshit. Let me tell you. Let me be pretty honest with you. Technical analysis is what is who you are as a trader. Is what is going to determine how long you go and how far you will go. So I'm going to emphasize more on psychology than technical analysis if you pay for the mentorship, which I'm going to launch pretty soon with a very good quality, very good cameras, everything. So like, subscribe, share, and don't forget to give me a thumbs up and comment if I should launch the mentorship next month, this month, or even I'm gonna upgrade everything there. So love, peace, and tweaks, signing out.